Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Tariff showdown. President Trump is set to unleash his first wave on Saturday with Canada and Mexico in his sights. Israel releases 110 Palestinian prisoners after a brief delay in protest of the chaos surrounding the handover of hostages by Hamas. And a Bloomberg scoop. The U.S. looks into whether China's DeepSeek got a hold of restricted NVIDIA chips via Singapore using third parties. It's just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Let's get you up to speed on these markets. A bit of a flip-flop session for the S&P and Wall Street yesterday. Things started off very strongly. We then had that U.S. GDP print slightly below expectations, but still growing around 2.3%, although business investment has started to decline. But then came the news that Trump was considering applying these tariffs on Canada and Mexico as soon as Saturday. So that sort of was a catalyst for a turnaround in sentiment. But what we're seeing today as futures are once again leaning towards the green. We've got S&P up 0.2%, NASDAQ up 0.5%. Also the NASDAQ paying attention to Apple earnings, which came out after hours yesterday. Slightly weaker sales in China, but that was compensated for by strong growth in Japan and Europe, and also positive assurance on some of the revenue guidance in the months ahead. So a positive reaction for Apple. NASDAQ also leaning towards the green today as well. The USD also seeing a bit of a bid this morning, up 0.2% on those tariff announcements. So we're going to talk more about that shortly and what that means and whether they actually get implemented this time around, but giving a bit of a boost to the greenback. And then oil in focus as well today, up 0.8%. Similar theme here. The oil market is unsure whether these potential tariffs are also going to apply to oil exports coming through from Canada. And the U.S. imports around 4 million barrels per day for refinery purposes from Canada. So if there isn't a carve-out, then it could constitute a bit of a hit to the oil complex. So that's what's being factored into the oil market. I also just want to flip over and flag gold and what's been happening with gold, because once again, we've reached a record high for the bullion. So this is where we are. It's actually seen its best month since last March. And we just continue to climb again on concerns about geopolitics around the world, but also safe haven and also a lot of uncertainty about what's going to happen vis-a-vis global growth and some of these tariff dynamics. So gold, once again, getting to a record high. Now, but back to tariffs again. President Trump is set to impose 25% tariffs on $900 billion of goods from Canada and Mexico. It's a move that could lead to a trade war with the two biggest buyers of U.S. goods.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. Number one is the people that have poured into our country so horribly and so much. Number two are the drugs, fentanyl, and everything else that have come into the country. And number three are the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
Well, for more on this, let's bring in our news desk editor, Jill Deesis. Jill, well, let's see if President Trump actually follows through this time around. He does sound pretty serious, though. But let's also discuss the potential scope, because it could affect up to $900 billion worth of goods. Tell us more.
Yes, that's right, Jemana. Though I think, as you sort of alluded to earlier, the big question here is whether oil is ultimately going to be involved in this package. At this point, we've heard 25% tariffs on both Canada and Mexico, as Donald Trump just outlined there, as you mentioned, affecting $900 billion worth of goods imported into the U.S. But what industries does this ultimately impact? There's obviously, quite a bit of focus already on things such as the automotive sector, to which the U.S. automotive sector, to which Canada and Mexico are both massive contributors in the form of goods. But ultimately, Canadian crude is another really, really big import that it's not entirely clear whether that ultimately falls under the scope of these tariffs. Even though the U.S. obviously produces quite a bit of its own oil, Midwestern refineries are, huge, sort of clients for some of that Canadian crude oil. As you can see, the oil market there isn't entirely sure how exactly this is going to go. Donald Trump did imply just a few hours ago that that's something that they're probably looking at. Maybe they'll decide at some point, but we still don't really know yet. So lots of questions unanswered here.
Yeah, the oil question is an important one because, as you say, Canada ships about 4 million barrels a day to the U.S. And then Mexico as well also shipped 500,000 barrels a day. So remains to be seen whether there's going to be some form of a carve-out there. Jill, what should be the knock-on reading, do you think, to potential tariffs on other countries? And obviously he has talked about tariffs on China as well.
Yes, that's right. Well, I think, Jemana, there's a couple of things to look at here. First of all, it's this idea of Trump being more aggressive in this second term in office with using tariffs as a negotiation tool. So we don't really know, first of all, obviously some of the specifics of these tariffs, but also how long those may be imposed or how much of that is ultimately a bargaining chip for Trump to get what he wants. We obviously saw this play out a bit earlier this week with Colombia, where he was threatening, tariffs over, some concerns about wanting to deport migrants to the U.S. So, that sort of resolved before it became a giant trade war. But this is something that Trump certainly seems to be taking into effect, threatening tariffs, sort of his weapon of choice here when he's trying to get what he wants out of other countries. When it comes to China, he certainly seems to be keeping alive this idea of 10% additional tariffs on Chinese goods coming into the U.S. Of course, the scope of that also seems to be in question here. And that's actually a bit less than what he was threatening on the campaign trail. So it's, again, not really clear here, but it does seem quite clear that, at least, one thing that's clear here is that Trump does want to be using tariffs as a major negotiation tool at the table. We'll have to see what happens with some of those, Chinese tariffs that he's threatening, but obviously really kind of just setting the tone here when he's only been in office for a couple of weeks at this point.
Yeah, absolutely. And just in terms of other trading partners, it is not exclusive to Canada and Mexico. Obviously, the biggest trade that the U.S. conducts is with Canada and Mexico. China, for a long time, even on the campaign trail, Trump was talking about potentially introducing tariffs there. But then he also, remember, that Davos speech, he was also addressing some of the European countries, European CEOs, and saying, unless you start doing more business on our soil, then we could also look at applying tariffs there. What do we know about the composition of those tariffs as well vis-a-vis Europe? And again, he's specifically targeting countries that have a trade deficit with the U.S., or the U.S. has a trade deficit with.
Yes, that's right. It's really those countries, that have that trade surplus. So where the U.S. is at a deficit there that he's really kind of concerned about. I think, just to go back to that Canada and Mexico point, obviously both of those countries enjoy a trade surplus with the U.S. That's why Trump is targeting them. Yes, but yes, Trump has certainly opened the case for European countries to be the recipients of U.S. tariffs if he so chooses to go that direction. We've obviously seen here just from his first days in office that he's willing to kind of open up the case against allies as well as adversaries. I think another target that you're really looking at here is he's kind of implied that, BRICS nations more broadly, so not just really China here, but more broadly would be the recipient of 100% U.S. tariffs if they chose to try to, challenge more aggressively, the dollar supremacy as a world currency. So I think that there's a lot here to really focus on, but Trump is not really, sort of playing favorites or anything like that. He's really willing to go broad here with his tariff plan.
Yeah, and again, it comes down to the question of how much of this actually is going to be implemented and how much of it is a negotiating tactic. And it's really unclear at this point, very difficult for traders to price that in. News Desk editor Jill Deeses, thank you so much for joining us today. Well, over to Middle East news now. Israel has released 110 Palestinian prisoners after a brief delay to protest the chaos surrounding the handover of hostages by Hamas. The Israeli Prime Minister's office says mediators delivered a commitment that a safe exit will be guaranteed for Israeli hostages in the next round of swaps due tomorrow. Let's bring in Honor and Bloomberg's managing editor for Middle East and North Africa. Honor, just walk us through exactly what happened yesterday. Why was there so much chaos and uncertainty around the release of those Palestinian prisoners?
The delay in the release of Palestinian prisoners was down to the fact that what Israel said was a chaotic environment that surrounded the release of 2 Israeli hostages in Han Yunis earlier in the day by Hamas. It's all been resolved now, but I think what happened yesterday is just a reminder that how volatile and fragile this ceasefire is, just like any other ceasefire that ever existed. But what I think is important at this point is the fact that, as you said, the next round of swap of prisoners and hostages is set to take place tomorrow as planned. And it looks like what happened yesterday is not going to derail the process, which is a 6-week-long interim ceasefire in Gaza, during which Israelis and Hamas, through mediators, continue to talk through their differences, are not their differences, and turn this interim ceasefire into a permanent end to the fighting in Gaza that's been ongoing for 15 months, Jumana.
Yeah. Honor, one feature of the first phase of the ceasefire was the release of hostages in exchange for prisoners. The other element was the distribution of humanitarian aid. There seems to be an announcement that has come through in the last 24 hours suggesting that Israel will continue with the banning of UNRWA and the operation of UNRWA within the Gaza Strip. How much of a blow is that going to constitute to humanitarian efforts, and why are Israel holding on to that stance?
So, Jumana, the UN Relief and Works Agency, known as UNRWA, as I said, is not going to be able to operate in Israel from now on, although its staff and operations in Gaza and the West Bank remain unaffected by the decision. Well, the differences between the two are long-standing. The UN agency, which has been working for almost 75 years, has been accused by Israel many times in the past of harboring people with anti-Israel sentiment. And the latest round of accusations came after the October 7th attack that took place in 2023, where Israel basically said that some members of UNRWA, or UNRWA itself, was turning a blind eye to the fact that its members may have been involved in the October 2023 attacks. That is the root of the problem. What is happening right now is that UNRWA offices, Israel, will be closed as a result of the decision that you just mentioned, and there is a concern that this may disrupt its ability to deliver aid inside Gaza.
Yeah, and could have, as you say, huge humanitarian effects, given that UNRWA accounts for about half of the aid that's delivered into Gaza currently. Honor Ant, Bloomberg's managing editor for Middle East and North Africa. Thank you. Well, Apple's revenue forecast for the current quarter is expected to grow in the low to mid-single digits, soothing investor nerves after a mixed report on holiday sales. First quarter revenue met estimates, but China sales plunged 11% to $18.5 billion, where analysts had forecast $21.6 billion. iPhone sales dropped to $69.1 billion, which was below Wall Street's projected $71 billion. Shares closed higher in late trade, reversing earlier losses. Samsung's chip division has reported a smaller than expected profit, but it's had a boost from long-delayed approval to supply NVIDIA with high-bandwidth memory chips for use with AI processors tailored for the Chinese market. The world's largest memory maker is fighting to narrow the lead of arch-rival SK Hynix in the artificial intelligence arena. Shares of both companies fell in Seoul, with Hynix tumbling and post-holiday trading on the repricing triggered by the Chinese upstart DeepSeek. And still ahead, hear why TB Ventures expects investors will be more discerning and selective on AI investments following a wild week of moves in tech. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian equities are lower today as concerns over the impact DeepSeek will have on the artificial intelligence market pressure South Korean chip makers. Now, joining us right now is Kaia Parv, venture partner at TB Ventures. So much to talk about this week, Kaia. We're definitely going to get to DeepSeek, but I actually just want to bring you to the story of the day. Walking in this morning, yet again, President Trump has been talking about tariffs, the potential imposition of tariffs as soon as this Saturday on Canada and Mexico. One of my colleagues said, you shouldn't take Trump literally, but take him seriously. As an investor, how do you trade around the noise surrounding tariffs?
Firstly, thank you so much for having me on the program. It's always a pleasure to join you. Definitely, we knew that when Trump came to the office that we can expect the unexpected from this administration. And I believe the traders probably have gotten themselves a bit more alert now that we have to watch what's coming out of the White House, what would be coming out of X or Twitter. But tariffs, I would say, were probably the more predictable policies from this particular administration. And we also roughly knew which countries would be targeted first. So I would say this is not necessarily news, but I don't believe that Trump will be as harsh as he promises or sort of puts out currently, because we are still mindful what could be the potential downstream effects in the US, maybe in the form of inflation. Although, of course, the currencies will adjust accordingly. Maybe some of that increase price in the US consumers will be wiped out through the depreciation of currency on the other side. And I thought maybe Germany would also be among those first countries, given how weak Germany's negotiation stance currently is. They are stagnating in their economy. They have elections around the corner, but yet to see what will be the next round.
Yeah, maybe he's waiting for the elections to finish as a gift to the new chancellor. Who knows? Let me just bring it back to DeepSeek, though. Would you say then that the biggest risk to bullish sentiment for stock markets is the evolution of DeepSeek and the competition that's coming through from China in that space?
I think equity markets and markets in general definitely were shook by the release of DeepSeek. Although for AI community, it wasn't really a news that DeepSeek was out there and they were developing a chatbot. And I think what caught everyone by surprise was the low cost of capex and opex that is required to run DeepSeek, which just goes to show how much money has gone to waste maybe in the US and in Europe developing AI. Having said that, I think the long-term effects will be positive. It will bring down definitely the costs for everyone. Everybody will have to rethink their models. But in the market's perspective, we can see so much conviction in the AI narrative, and that's being challenged now.
So I want to ask you a question leaning into your expertise as a venture capitalist. You know, 1/3 of AI companies or AI-related companies received 1/3 of all VC investments. And you've got to wonder now whether the amount of funding that's going into that space is actually going to be monetized. Do you think there's pain that's going to come later down the track now for all of the funding that has gone in that is unlikely actually to yield the investment or the return on investment that many of these capital allocators are looking for?
That's such a great question. And I do expect the conversations between companies and venture capital firms change. I think the blank checks just on a premise of we have a narrative, we have an idea is not going to work anymore. I think there will be much more focus around how you actually plan to develop your product, what are the costs associated with it, and also how do you plan to run your model. What I do think is that the cost of capital is still above 10-year trend line. Investors are definitely going to be more selective. On the flip side, AI is now a national security element among most large economies. I think most countries have said that AI is important for us. So I expect a lot of private-public co-investment into AI initiatives, and we're seeing this coming out of the US already.
Yeah, and let me just round up for you. What do you think the higher interest rate environment is going to do? Because again, the markets have started to dial back their expectations of where interest rates are going in the Fed. What's the knock-on effect to early stage investment?
Amazing question again. So what I would say is I think we see cost of capital being higher than we have seen in the past. I think companies and investors are much more selective who they want to work with. What is the likelihood of their partners and portfolio companies surviving? And I think we can see higher for longer given all the policies that we are seeing from the White House and also the geopolitical movements. So I think it will be difficult for very early startup companies to raise money as easily as they have done maybe last couple of years within the AI space in particular.
Yeah, so interesting, Kaia. Well, thanks for coming on our show. Really good to chat to you. Kaia Parv, venture partner at TV Ventures. Coming up, as the U.S. investigates whether DeepSeek managed to buy restricted chips via a third party, we look into the sudden impact of the app. Next, this is Bloomberg. Bloomberg has learned that U.S. officials are investigating whether Chinese AI startup DeepSeek got around American export controls to buy advanced NVIDIA chips, possibly through third parties in Singapore. Bloomberg Originals has been looking closer at the sudden impact of DeepSeek on established assumptions about the cost of developing AI technology. Here's a preview.
January 27th, 2025 may go down in history as DeepSeek Day.
DeepSeek shaking up global tech.
NVIDIA losing nearly $600 billion in market cap today alone.
A handful of other US chip stocks, many trading at 30 times earnings or more, plummeted as well. They dragged down the S&P 500 and the Nasdaq 100.
The entire stock market has been really hinging on this AI supply chain. And what DeepSeek threw into question is whether or not that supply chain really needs to be built out as much as the companies have projected.
DeepSeek makes an app similar to ChatGPT or Claude. It'll write code, answer questions, or script an empathetic breakup text.
It quickly surged to the top of the App Store and it surpassed OpenAI's ChatGPT.
And what's extraordinary is its apparent quality and low cost. And of course, its seeming appearance out of nowhere.
DeepSeek revealed it was able to build this model and train it at just a fraction of the cost.
In fact, it ranks among the top performers on a UC Berkeley affiliated leaderboard called Chatbot Arena. But it's also open source. Developers can inspect the code, modify it, and run it on their own servers, even for commercial use.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
Washington, for a number of years now, has been restricting China's access to cutting-edge chips, which they thought would hold it back significantly in the AI sector.
DeepSeek's focus on efficiency rather than funding meant it could engineer itself into a competitive position, even if it was standing on the shoulders of giants.
There are a lot of people now in Silicon Valley trying to decipher how exactly DeepSeek was able to build this model, whether it used technology from other companies, and whether it used more chips than it's let on.
I don't think there's a clear answer to that yet, but I do think they have shown, in the research that DeepSeek has published, that they have been able to, come up with their own innovations here, and they have been able to really be efficient with the technology that they do have.
This is a bit of a wake-up call for the AI industry.
Well, subscribers can watch that report in full on the terminal and Bloomberg.com. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Tariff showdown. President Trump is set to unleash his first wave on Saturday with Canada and Mexico in his sights. Israel releases 110 Palestinian prisoners after a brief delay to protest the chaos surrounding the handover of hostages by Hamas. And a Bloomberg scoop, the U.S. looks into whether China's DeepSeek got a hold of restricted NVIDIA chips via Singapore using third parties. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Still, markets piecing together the impact that DeepSeek has had on some of these tech stocks earlier in the week, but a bit of a recovery coming through. We've had reasonably good earnings come through from some of the big tech firms that have reported this week, the latest being Apple and after hours. Disappointing on China sales, but compensating by a pickup in sales in Japan and Europe. Also hinting that revenue in the future is going to be in line with what analysts had expected. So some positive signals coming through from Apple that's being reflected in the Nasdaq futures today, up 0.5% as we head into the European session. S&P futures also up about 0.2%. Later today, one figure that you want to watch out for, we have the Fed's preferred inflation gauge, the PCE metric. So watch out for that, given the commentary from the Fed this week and the cautiousness they implied about the future path for interest rate policy. The USD also getting a bit of love this morning, up 0.2% after President Trump made those comments to reporters about the potential imposition of tariffs as soon as Saturday on Canada and Mexico. So that's been positive for the USD. And then Brent also seeing a bit of an uptick this morning as well, up 0.8% as well, as because at this point it is unclear whether those tariffs are also going to apply to some of the oil exports coming through from Canada as well. If they are not, if there are no carve-outs, then you've got to imagine that that will tighten tighten the market. So Brent is up 0.8% today. Flipping over, let's not forget we had an ECB meeting yesterday. And even though they cut by 25 basis points in line with market expectations, they still described policy as being, quote, restrictive, and therefore hinting that further interest rate cuts are to come. But again, if you look at where ECB rates are, base rate is sitting at 2.75%. It's still significantly below other counterparts. The likes of the Fed and Bank of England have interest rates that are much higher. But even with that, interest rates are still restrictive in Europe. So that's something to think about in the context of very weak growth. We had GDP data for the fourth quarter yesterday come in at 0%. So flatlining growth from Eurozone. Now switching over to the region. The election of Lebanon's Nawaf Salam as the country's new prime minister is widely seen as a political breakthrough. The former ICJ chief is now faced with the challenging task of forming a government. The new administration will have to maintain a fragile ceasefire between Israel and Hezbollah and implement much-needed reforms to help revive Lebanon's battered economy. Joining me now is Adel Afiouni, Lebanon's former Minister of State for Investments and Technology. Adel, it's good to have you on. The government formation process was always going to be quite tricky, and even though it felt like a new dawn was beginning with the appointment of Nawaf Salam as Prime Minister, it has been a tricky week in terms of figuring out who is going to be appointed to certain cabinet posts. The signaling that is coming through from the West is that they would like to see the cabinet formed along non-sectarian lines or non-partisan lines. But of course, the push internally is for a different approach. How likely is it in reality that we end up with a cabinet that is not sectarian?
So it's not only the signaling from the West. I think most Lebanese people are expecting the new regime or the new administration, a new president, a new prime minister, to break with the tradition of the past of forming government, which are formed along sectarian divisions and distribution of positions among the political parties, with, as we all know, a result of ineffectiveness and inefficiency over the last several years that led to a disastrous financial, banking and economic collapse. So it's the population, in my opinion, much more than just the international community, who is expecting the new prime minister and the new president to form a reform-minded cabinet with independent ministers who have the technical expertise to tackle a very complicated financial and economic crisis, but who also have the independence and who have the priority of public service in mind, not to serve political parties or sectarian leaders.
It seems to me like the most important appointment, though, is going to be the finance minister or the economy ministry as well, given the state of Lebanon's economy, the currency collapse, the zombie banking system, all of the things that have happened in the run-up to the most recent flaring up of conflict with Israel. How significant are those roles going to be, do you think, in terms of Lebanon's future?
The finance minister definitely is the most powerful position in the cabinet. His signature is required on every decree. And in the past, finance ministers have actually proved to be powerful in that regard. They've actually blocked in the past some decrees, even unrelated to financial matters. Even more so right now, because we are facing, as you mentioned, a very challenging economic and financial crisis that requires radical reforms. And what we've suffered from in the last 5 years is zero action, zero reform, precisely because the government was crippled by political divisions among the parties that were forming that were representing the government, and that hindered any attempt to address the crisis. Therefore, the position of the finance minister, or who will be appointed as finance minister, and how independent he will be from political influence, is going to be crucial. But it's not just the finance ministry, obviously, because you have a lot of other, I mean, the cabinet's 24 people, or at least that's the expectations. I think to be effective, they need more than just the finance minister as technical economic experts. They need a cabinet of an economic cabinet, or at least a strong team of economic experts who have the expertise to tackle the crisis, but also have the political will to take on the special interests, the obstruction in parliament and outside, by basically different parties who have blocked any attempt to reform or to negotiate or to agree an IMF agreement, for example, or to make any meaningful reform in the past. Like, if we don't learn the lessons from the last 5 or 6 years of ineffectiveness and inefficiency and effectively pure kicking the can, which obviously is a heavy price paid by the population, then we're going to end up with the same situation, and it will be a huge missed opportunity.
Yeah, let's talk about the banking sector. Effectively, it's been frozen for the last few years. The banks are sitting on $70 billion worth of liabilities. That's more than 3 times Lebanon's GDP. What should be the first step to unlock the banking situation in Lebanon now and think about the distribution of losses to get the system functioning again?
So unfortunately, it's a very complicated crisis where things are interrelated. The banking sector is obviously technically bankrupt, and they cannot pay their depositors, which has led to a severe social crisis because you have more than 100 billion of deposits of people's life savings wiped out or at least blocked within the banking system. And this obviously has severe implication socially, but also on the economy. Like, the banking system is not even functioning to fund any economic reconstruction. And we have to also remember that there's a lot of reconstruction expected following the Israeli war on Lebanon in the last few months. So to solve the banking sector crisis, we also need to solve public finance crisis. Restructure the government's debt, restructure the central bank and recapitalize it. It's a complicated situation, and all things are interrelated. And unless we tackle them together as part of a global solution and not in piecemeal, then it's impossible to find a solution. So the banking crisis is linked to the restructuring of the government's debt and of the central bank's debt and of the recapitalization of the central bank. And that will also lead to an assessment on how much the government or the state can contribute to solving the banking sector crisis. And from there, we need to obviously keep in mind that there is a severe social crisis due to the depositors, to hundreds of thousands of families having lost their life savings deposits.
Just very quickly, the Eurobonds are trading at 16 cents of the dollar. They've rallied, obviously, since the lows. But what do you think is going to be the actual recovery value for these bonds, or is it too early to say?
It's too early to say, obviously, because as I said, it's linked to how the government will come up with a financial plan which is sustainable, how they will solve their banking crisis, and what kind of liability will be basically taken on by the government to solve the banking crisis, and how this will address also the recovery on the Eurobonds. The task is extremely challenging and it's very complicated. That's why I think we need to keep in mind that unless there is a government which is effective and made of people who understand the complexity, but who are also focused on being independent and on serving the public interest and not special interest, then we're going to end up with the same problem as before. So for the Eurobonds, they've obviously rallied from very low levels. They were trading around 5-6 cents. Now they're in the mid-teens. We hope that basically we can get to a better recovery with a proper deal with the Eurobond holders. But negotiations haven't even started after more than 5 years of default. So it's still a long way to go.
Adel, really good to have you on the show today.
Thank you very much.
Adel Afiouni, Lebanon's former Minister of State for Investments and Technology. Thank you. Coming up, Dubai International Airport retains its title as one of the world's busiest airports with record passenger traffic in 2024. We'll speak to CEO Paul Griffiths exclusively about their 2025 plans and potential headwinds for the aviation sector. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, Dubai International Airport saw a record 92.3 million passengers in 2024. The numbers cement Dubai as one of the world's busiest airports ahead of its traditional rival, London Heathrow. A boom in the Emirates economy, real estate and tourism has made Dubai an increasingly popular destination. Joining us exclusively now is Dubai Airport CEO Paul Griffiths. Just talk us through these numbers, record traffic numbers for the year. Why is Dubai Airport such a draw?
Well, I think we were very, very lucky during the global pandemic that Dubai cemented its reputation as one of the world's greatest cities. And that's actually testament to the growth that we've seen. 92.3 million customers went through DXB's doors during the course of 2024, which is a new world record for international passenger traffic.
World records.
Indeed, absolutely.
What are you expecting for 2025?
Well, I think we're probably going to get to about 94, and then in 2026, probably something around 98, and then we'll cross that magic threshold to 100 million in 2027, if not before.
So still on track then?
Absolutely,
actually slightly sooner. Where are the biggest destinations coming from? What the arrival destinations?
The largest destination and origin for us is India. The second one is KSA. Third one is the UK. So those actually have remained fairly stable as the biggest contributors to our traffic. But China's coming back. It's about 97% where it was pre-COVID in terms of the visitor arrivals, so that's been good. I think generally, you know, we've gradually increased our number of cities worldwide. It was 240, it's now 277. So the range of destinations we're now able to offer from DXB makes it an absolute magnet for traffic, both visitors and transit
Are you
passengers.
worried at all about capacity concerns given your expansion plans?
I think so. I mean, we probably are good for about 120 million through DXB. The question is, though, because the city is getting so busy, is the road and rail infrastructure able to deal with that number of visitors?
Yeah, you know, I am going to ask you about the incident that everyone's been watching at Reagan DC Airport. Obviously not under your remit at all, but a couple of things that I do want to bring up. Number one is just the rise in passenger traffic and air traffic and the effect that that has on safety controls. How do you think about that as an operator of an airport that is incredibly busy?
Well, safety is an absolutely non-negotiable part of our operation. I mean, we follow the highest international standards. We are completely adherent to every possible measure. It's something that we never relax about, and it's something that, you know, we have to take very seriously, because actually preserving the safety of our customers and our staff has to be my and all of our staff's most important priority.
Yeah, one of the legacy, effects of the COVID pandemic also was it seems as though the industry really struggled later to attract, retain pilots and also air traffic safety control personnel. Do you think that partially what we're seeing now could be in response to what happened during the pandemic and just simply that it's been very difficult to attract personnel and keep personnel and the right number of personnel that is required given traffic is going up?
Well, I can only speak for Dubai Airports, obviously, and we were very, very diligent to retain every single piece of expertise we needed to get back up to full speed very quickly. We absolutely knew that the rebound from COVID-19 was going to be very rapid. That's why we retained all of our talent and we were able to exceed our pre-COVID numbers so quickly.
One of the other big features in the airline market right now is the delays of distribution deliveries of these Boeing jets. Yesterday, we were speaking to our colleague Leon and Rashdan about what Boeing are doing to get things back together again. And I just wonder whether it has put DXB in a competitive position versus other airports and other airlines that are struggling with the delays, with the deliveries, and also have had to lean on some of the legacy aircraft?
I think it's a large problem for the industry because we've seen that massive rebound since the global pandemic in demand for air travel that I think some people got wrong. So the airlines during COVID-19 took a huge opportunity to retire large swathes of aircraft across all fleets. And of course, the supply chain of new aircraft to replace them hasn't been able to respond as quickly as it needs to. So there's a shortage of supply and excess of demand, which is driving prices up and obviously is slowing growth. Our growth, I think, over the next few years would have been significantly higher if we didn't have to rely on the supply chain of new aircraft, which is obviously not performing as it should.
Yeah, so interesting. Do you expect those supply chain issues to normalize in the coming years?
They will normalise for sure because the excess demand is so enormous and the back order books of the major manufacturers is very, very long.
Yeah. Paul, always good to chat to you. Congratulations on a great year for DXB. World record traffic numbers for Dubai International Airport. That was Paul Griffiths, CEO of Dubai Airports. And coming up, tensions rise between Rwandan President Paul Kagame and President Cyril Ramaphosa over the conflict in Eastern Democratic Republic of Congo. We'll have the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The presidents of Rwanda and South Africa have traded barbs over the conflict in Eastern Democratic Republic of Congo, inflaming tensions between the two leaders amid regional efforts to secure a ceasefire. So for more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, so there was quite a public exchange of words between the leaders of Rwanda and South Africa, but what prompted the quite vitriolic response out of President Kagame?
Hi, Jumana. So all this began when South Africa's defense minister said that President Ramaphosa had warned that any other attack on South African troops would be tantamount to a declaration of war after South Africa lost 13 soldiers in the eastern part of DRC. And President Paul Kagame did not take this lightly. He took it as the threat that it was. And during the extraordinary heads of state summit, he took the opportunity to address it. And he was even challenging South Africa to clear the mess in eastern DRC if they have the power and might, instead of fighting those who are. On the other hand, you have the South African Foreign Affairs Minister who's trying to tone down and clean up the situation a little, saying both presidents have not spoken since that public exchange, but President Cyril Ramaphosa is open and keen to have dialogue with President Paul Kagame of Rwanda. He also says that South Africa is not a warmongering country. What they operate on is a broad mandate that for economic development to happen in Africa, all guns must be silenced. And he calls for some calm and refrain because inflammatory remarks can easily affect diplomatic processes.
Yeah, well, that's the political discussion that's going on in the background. But talk to us about the potential health risks that could arise right now from the current fighting that's taking place in Eastern DRC and in Goma.
Jumana, so just to put into context for you, 3 million people live in Goma, 1 million people displaced, and this is a health risk in itself. The Africa Center for Disease Control says that the war is exacerbating the risk of disease outbreaks, diseases like mpox, measles, cholera, and the Director General for Africa said, and I quote, "Guns cannot kill all of us, but outbreaks can." WFP has halted the distribution of basic nutrition because the fighting has almost jeopardized the health and safety of their staff, and access to food is becoming really difficult. Ports have been blocked, roads have been blocked, the airport has been blocked. And you also have WFP saying that the next 24 hours are going to be critical because supply of water and food is really running low. If you look at their hospitals, they're overwhelmed by the numbers of people who are injured. And this just goes to put further strain on an already strained healthcare system. And if an outbreak is to happen, the fighting chances then become lower.
Yeah, and then, of course, the backdrop of all of this is the U.S. have decided to start restricting foreign aid. So you've got to wonder how all of that is going to play out, especially in certain countries in Africa that have been so reliant on aid. About 40% of Rwanda's budget comes from foreign aid. So a big thing to think about there. Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much. Now for a look at some of the other stories we're following this morning. South Africa plans to raise $15 million to help fund a bid to host a Formula One race in 2027. Sports Minister Gaten McKenzie said in an interview that a bid will be submitted in May. He added that discussions with Formula One organizers have begun, as well as with potential sponsors such as Heineken and Red Bull, to help raise the capital needed to enter the bid. If successful, South Africa will host the Grand Prix Formula One event after a 30-year hiatus. The European Union has resuspended its case against China, the World Trade Organization, over allegations of economic coercion targeting Lithuania. The case was first filed in 2022 after Beijing imposed trade restrictions on Lithuania due to its own official contact with Taiwan. The EU had suspended the case in 2024, but resumed it last week to prevent the case from lapsing. And a look at how markets are shaping up as we head into the final trading day of the week. Equity futures leaning towards the green. S&P up 0.2%, Nasdaq up 0.5%. This after a seesaw session yesterday that did actually see Wall Street end up in the green. We saw an S&P complete the day up 0.5% higher, Nasdaq marginally higher, but of course keeping a close eye on all of the earnings that are coming through. Apple, the latest one to report in after-hours session yesterday. The stock trading up in after hours, so giving a bit of boost to the Nasdaq 100 after a steady stream of tech earnings that came through this week from Tesla, from Meta, and Microsoft as well. All of those, most of them having a positive impact on this market. But earlier in the week, of course, the big story that came out was DeepSeek and how that's going to disrupt the narrative that AI is being led by the U.S. So one of the big stories for this week. And then Euro stocks this morning leaning towards the red, down 0.1%. The big story yesterday, the ECB meeting, they did cut 25 basis points, but against a backdrop of much slower growth in the Eurozone. Now, coming up in the next hour of Horizons is Samy Chaar from Lombard Odier, independent economist Elize Kruger on the back of South Africa's rate cut. And we'll discuss how humanitarian groups are reacting to the Trump administration's foreign aid cuts with Linda-Gail Bekker from the Desmond Tutu Health Foundation. Stay with us as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Tariff showdown. President Trump is set to unleash his first wave on Saturday with Canada and Mexico in his sights. Israel releases 110 Palestinian prisoners after a brief delay to protest the chaos surrounding the handover of hostages by Hamas. And a Bloomberg scoop, the U.S. looks into whether China's DeepSeek got a hold of restricted NVIDIA chips via Singapore using third parties. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, it's hard to believe we started the week off with DeepSeek, and now we're ending the week with tariffs. A lot for markets to digest over the past few days.
Truly exhausting. And I was out on Monday. The 4-day week has felt like 4 months, I've got to say. How is it still January, Jen? But yeah, so much to digest, from DeepSeek to tech earnings to the Fed to the ECB. Overnight, obviously, we had some news as well, U.S. GDP. And then today we've got Fed's preferred inflation gauge, PCE, to watch out for, plus the potential announcement of tariffs. So there you go. That's your market recap. This is how markets are shaping up in the morning. We've got S&P up 0.2%, Nasdaq up 0.5%. Yesterday, Apple reported after hours. The reaction was quite positive to markets, so that's giving a bit of a boost to the Nasdaq this morning. The USD getting a bid, as Jen was just talking about, on those more tariff talks out of Trump administration, with them now saying that they could potentially implement tariffs on Canada and Mexico as soon as this Saturday. So that has given the dollar a bit of a bid this morning. And then energy also in focus, because at this point it is unclear whether the energy complex is going to get a carve-out from those tariffs. And if they don't, then that will add further tightening to this market. So Brent is up 0.8% today. Switching over, though, the terminal chart this morning, I just want to draw your attention to the fact that gold also continues to make record highs. So we've been talking about other asset classes this week, but gold surreptitiously has been rising and rising, making another record high this week. Talk of tariffs obviously not helping here, but aiding the safe haven currency. And this is actually the best month for gold since last March. Another very strong month for gold.
Absolutely. Now, Jumana, let's stick on what is happening in the U.S., and that is coming from President Trump. He is set to impose 25% tariffs on $900 billion in goods from Canada and Mexico. It's a move that could lead to a trade war with the two biggest buyers of U.S. goods.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. Number one is the people that have poured into our country so horribly and so much. Number two are the drugs, fentanyl, and everything else that have come into the country. And number three are the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
All right, for more, let's bring in News Desk editor Jill Desis, who is joining us now. So, Jill, we were just hearing from Trump there just a few hours ago. He has said this to a certain extent over the past few weeks or so. How likely, though, are we to actually see these tariffs imposed tomorrow?
Well, Jen, at this point, I mean, you know, he's saying that we're going to go ahead and see these tariffs. I think there's still a fairly big question as to which goods these actually apply to. The big question, outstanding question there being whether or not Canadian crude oil is actually covered under these tariffs. Trump has kind of said, you know, we'll probably look at that tonight, meaning U.S. time. We still haven't really heard from Trump, so certainly, you know, very Trumpian of him to kind of keep us in suspense there. But look, I mean, Trump is no stranger to trying to use tariffs as a negotiating tool. He seems very adamant about kind of making this a point where he's kind of coming out even more aggressive than he did in his first terms in terms of this idea of introducing new duties to try to get what he wants, extract what he wants out of these types of countries. We just saw this earlier this week when he was threatening tariffs against Colombia, ultimately rescinded those when, you know, they kind of bowed to him on certain immigration-related concerns. But whether we go ahead here, I mean, again, Trump loves a deadline. He loves a little bit of drama. We'll see. But I think the bigger question there is, even if tariffs go ahead, which goods exactly are going to be impacted here?
And Jill, have we heard from any of these countries at this point? Of course, we are seeing some of their currencies, or both of their currencies, actually reacting to this, as are some of the BRICS nations' currencies that Trump was talking about as well. What have we heard, though, from officials?
Well, I think, you know, in both cases in Canada and Mexico, we saw officials react to the idea of tariffs pretty much right off the bat. I mean, Trump initially floated these 25% tariffs back in December when he was still president-elect. We heard, you know, from the Canadian government, from the Mexican government at that time, you know, sort of, you know, saying they wanted to work with the U.S. I think as you heard Trump kind of say in that clip right there, one of his big concerns is border security and also the fentanyl trade kind of come to mind here. We've heard both Canada and Mexico reference those things in terms of working with President Trump. Though, I mean, you know, also, I mean, these are two economies that are, you know, for one thing, are allies of the United States and have referenced the fact that, you know, there might be retaliatory efforts here if you know, Donald Trump does go ahead with these tariffs. That's, of course, you know, what we're talking about when we say this could lead to some kind of an escalation in a trade war potentially between the U.S. and these countries. So again, really kind of ratcheting up tensions there. I think, though, at this point, pretty much everyone wants to, you know, reach a deal, you know, to try to make sure that, you know, things kind of, the tensions are sort of calmed here. But of course, you know, Trump is coming into office here playing strongman. That's kind of the image that he wants to protect. So again, you know, we'll have to see if there's any kind of a retaliatory effort on the part of either Canada or Mexico. And then again, you know, what these tariffs ultimately look like if they are executed on February 1st and how long that actually lasts for.
Right. It's looking like it's going to be a busy weekend for many people. News Desk editor Jill Desis there. Jill, thanks so much for joining us.
Israel has released 110 Palestinian prisoners after a brief delay to protest the chaos surrounding the handover of hostages by Hamas. A statement from the Israeli Prime Minister Benjamin Netanyahu says that following his demand, mediators delivered a commitment that a safe exit will be guaranteed for Israeli hostages in the next round of swaps. Let's bring in Paul Wallace, who leads our MENA economy and government coverage. Paul, what exactly happened yesterday with the exchange of the hostages for the prisoners? Why was there a delay?
Hi, Jumana. Well, we had 8 hostages being released from Gaza yesterday, 3 Israelis and 5 Thai nationals. One of the Israelis was released without incident in the north of the territory, but the other 7 were freed or handed over to the Red Cross by Hamas in the city of Khan Yunis. And the scenes were pretty chaotic. They were surrounded by many, many people. You had Hamas gunmen sort of effectively stepping in and trying to show that they were protecting the hostages from the crowd. And this is something that outraged Israel. Israel's president, Isaac Herzog, said the scenes were horrifying. The Israeli government said the hostages' lives were put at risk by Hamas's decision whenever these exchanges take place, to sort of turn it into a propaganda opportunity. So it takes the hostages onto a sort of platform, and in a kind of warped, bizarre scene, it sort of gets them to stand alongside armed Hamas fighters and wave to the crowd. And this is something that Israel is deeply concerned about. There's going to be another swap tomorrow, or it's scheduled to be, and Hamas will probably try to do something similar. The delay yesterday didn't last too long. It was just a few hours before Israel did indeed release the 110 Palestinian prisoners that it was set to. But it just goes to show how fragile this ceasefire is, a ceasefire that's coming up to 2 weeks old.
Yeah. Well, the other element of the ceasefire is the distribution of humanitarian aid. Yesterday, the Israel High Court of Justice ruled, against the or for the banning, I should say, rather, of the UN relief agency, UNRWA. What sort of impact is that going to have on the distribution of food aid and necessary medical supplies that are so needed right now into the Gaza Strip?
Yeah, this is something that is causing a lot of concern among aid workers and aid organizations. Israel says that UNRWA, the UN Relief and Works Agency, isn't actually responsible for that much aid going into the Gaza Strip. By its measurements, it's only responsible for somewhere between 1% and 10% of aid going into the Strip. However, UNRWA, even if that is true, UNRWA is far more important than that figure suggests, given that it's, even if it's not responsible for the physical donations coming into Gaza, it is responsible for their for much of their distribution throughout the territory. So there are concerns that aid, which is, has increased substantially since the ceasefire kicked in, will be stalled, or it's going to be a lot more difficult and complicated to get it into Gaza and to get it to the people who so desperately need it, now that UNRWA is no longer allowed to work and coordinate with Israeli authorities. It's still allowed to work within Gaza, but the fact that it can't have operations within Israel is something that could definitely stymie its ability to work.
Yeah. Paul Wallace, leading our MENA economy and government coverage. Thank you so much for the reporting.
Now let's take a look at some of the other stories we're following this morning. Apple's revenue forecast for the current quarter is expected to grow in the low to mid-single digits, soothing investor nerves after a mixed report on holiday sales. First quarter revenue met estimates, but China sales plunged 11% to $18.5 billion, where analysts had forecast $21.6 billion. iPhone sales dropped to $69.1 billion, which was below Wall Street's projected $71 billion. Shares closed higher in late trade, reversing earlier losses. Samsung's chip division has reported a smaller than expected profit, but it's had a boost from long-delayed approval to supply NVIDIA with high-bandwidth memory chips for use with AI processors tailored for the Chinese market. The world's largest memory maker is fighting to narrow the lead of arch-rival SK Hynix in the artificial intelligence arena. Shares of both companies fell in Seoul, with Hynix tumbling in post-holiday trading on the repricing triggered by Chinese upstart DeepSeek. And a bit of a programming note for next week. We'll be live from the African Mining Indaba Conference in Cape Town, and we'll be speaking to a number of key newsmakers, including Botswana's new minerals minister, the CEO of Cobalt Metals Africa, and also the CEO of Barrick Gold, in addition to many others. So please stick with us for that. But first, hear why Lombard Odier chief economist Samy Chaar says growth should be the key focus of policymakers in Europe. That's coming up next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Asian equities fell Friday as concerns over the impact DeepSeek will have on the artificial intelligence market pressured South Korean chip makers. Not just that, a whole host of other things going on in markets this week, including the ECB's decision yesterday. Joining us is Samy Chaar, the Chief Economist and CIO of Switzerland at Lombard Odier. Great to have you with us. I am going to start off with your impressions of yesterday's ECB meeting. They did cut interest rates by 25 basis points, signaled that interest rates are still rather restrictive and therefore they will likely have to loosen further in the coming months. Did you learn anything new?
Not much, Jumana, and thanks for having me again today. I think it was an easy one for the ECB. The data is in line with the ECB cutting further. Inflation is coming down. Of course, there remains residual inflation in services, but Christine Lagarde made the point that when you look at the dynamics of wages, they feel pretty relaxed that at some point inflation will get back to target as soon as this year. But as always, when it comes to the ECB, it's a little bit more about inflation. We understand that's their mandate, but it's never enough about growth. And the little inconsistency that I heard yesterday was that they acknowledge that policy is restrictive while also acknowledging that growth is below potential, right? And if growth is below potential, it doesn't require restrictive monetary policy. So that tells us that the ECB has much further to cut.
Yeah. Do you think they could actually go for a 50 basis point rate cut in coming months if the situation deteriorates further economically?
Well, Christine Lagarde totally dismissed with vigor the idea of a 50 basis point cut. She wants to be gradual. We can understand that. But she shouldn't be so dismissive. The economic situation in Europe and the lackluster growth situation could require a bit more aggressive cutting by the ECB. And we haven't even yet discussed about tariffs and what that could mean for the European outlook. So it shouldn't be dismissed as quickly as it was yesterday.
So you actually segued into the question I was going to ask you. Before the ECB meeting yesterday, the Eurozone GDP data came out for the fourth quarter, indicating no growth, 0% in the fourth quarter. This is even before tariffs are potentially being implemented or not implemented. I mean, who knows at this point what the Trump administration is going to do. But if that scenario does actually get realized, what do you think happens to the European growth outlook? Are we staring down the barrel of a recession?
No, I think recession is a little bit too severe. Income growth is still there. Wages are growing above inflation. So you really have real income growth, which is purchasing power gains for the European. You know, they're Europeans. They don't consume as much as the Americans. They tend to save a lot of that rather than consume it. But I think it's more about lackluster growth. In an environment where we're seeing U.S. growth as well, we had U.S. GDP yesterday, and if we strip out inventories and some of the most volatile components, U.S. GDP was actually pretty strong on the consumption side. So it's really about the U.S. that continue to outperform, while Europe continues to underperform. And at some point in Europe, you do have a lot of frustration about that divergence in economic performance. So, you know, all policymakers in Europe should be thinking about growth today.
Yeah, I want to take you down slightly different tack, and that is the arrival of DeepSeek. That earlier this week, it caused massive disruption across global markets, specifically in the U.S., with the tech, people's assumptions about tech leadership in the U.S. being challenged. How serious a moment do you think this is for the direction of travel for U.S. markets from here onwards?
I think what you have is a fierce competition, and the platform is technology and AI. And in that competition, there was the feeling that the US were well in advance. And what we've learned is that obviously the Chinese and some others are actually not that far behind. And they've been very creative to play catch-up, right? They have great competitive advantage to do so. But again, they're playing catch-up. They're not moving the innovation frontier further. And it does seem that the only ones who are really able to move that innovation frontier are the Americans with a lot of means. So, of course, easy to play catch up, but not easy to innovate further, right? So I think the race and the competition rages on. It's pretty good for macro, I think, in the end. We've seen good corporate profits from these big techs, and we actually expect that to continue. But it's a very, very strong and intense competition that should continue in the quarters to come, if not years.
Samy, always good to chat to you. Thank you so much for waking up early and coming on our show. Samy Chaar, Chief Economist and CIO of Switzerland and Lombard Odier. Coming up, as the U.S. investigates whether DeepSeek managed to buy restricted chips via a third party, we look into the sudden impact of the app next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. U.S. officials are investigating whether Chinese AI startup DeepSeek used third parties in Singapore to buy advanced NVIDIA chips. The move would have circumvented U.S. restrictions on the sale of chips used for AI tasks. The investigation by the White House and FBI highlights concerns on the effectiveness of U.S. attempts to cut China off from the advanced technology. Now, Bloomberg Originals has been looking closer at the sudden impact of DeepSeek on established assumptions about the cost of developing AI technology. Here's a preview of this week's talk.
January 27th, 2025 may go down in history as DeepSeek Day.
DeepSeek shaking up global tech.
NVIDIA losing nearly $600 billion in market cap today alone.
A handful of other US chip stocks, many trading at 30 times earnings or more, plummeted as well. They dragged down the S&P 500 and the Nasdaq 100.
The entire stock market has been really hinging on this AI supply chain. And what DeepSeek threw into question is whether or not that supply chain really needs to be built out as much as the companies have projected.
DeepSeek makes an app similar to ChatGPT or Claude. It'll write code, answer questions, or script an empathetic breakup text.
It quickly surged to the top of the App Store and it surpassed OpenAI's ChatGPT.
And what's extraordinary is its apparent quality and low cost, and of course its seeming appearance out of nowhere.
DeepSeek revealed it was able to build this model and train it at just a fraction of the cost.
In fact, it ranks among the top performers on a UC Berkeley affiliated leaderboard called Chatbot Arena. But it's also open source. Developers can inspect the code, modify it, and run it on their own servers, even for commercial use.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
Washington, for a number of years now, has been restricting China's access to cutting-edge chips, which they thought would hold it back significantly in the AI sector.
DeepSeek's focus on efficiency rather than funding meant it could engineer itself into a competitive position, even if it was standing on the shoulders of giants.
There are a lot of people now in Silicon Valley trying to decipher how exactly DeepSeek was able to build this model, whether it used technology from other companies, and whether it used more chips than it's let on.
I don't think there's a clear answer to that yet, but I do think they have shown, in the research that DeepSeek has published, that they have been able to, come up with their own innovations here, and they have been able to really be efficient with the technology that they do have.
This is a bit of a wake-up call for the AI industry.
And subscribers can watch that report in full on the terminal and Bloomberg.com. And it will be available later on the Bloomberg Originals YouTube channel. So make sure you subscribe to that channel. All right, let's take a look at markets. Equity futures are leaning towards the green with the exception of the Euro Stoxx futures, which have now turned south, trading just below the flat line. S&P futures up 0.25%, Nasdaq up 0.5%. In terms of what to watch out for today, we have the PCE figures coming through. The Fed obviously keeps a close eye on those metrics to determine the path of inflation. So that's going to cap off a very busy week in terms of announcements, data, and of course the latest being that President Trump is now looking to impose tariffs on Canada and Mexico as soon as tomorrow. So all that has happened this week for stock markets. But coming up, South Africa's central bank cuts rates by 25 basis points, warning about inflationary risks. We'll discuss price pressures and the economy with Elize Kruger. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Tariff showdown. President Trump is set to unleash his first wave of tariffs on Saturday, with Canada and Mexico in his sights. This is Horizons Middle East and Africa. Our top stories this morning. Tariff showdown. President Trump is set to unleash his first wave of tariffs on Saturday, with Canada and Mexico in his sights. Israel releases 110 Palestinian prisoners after a brief delay to protest the chaos surrounding the handover of hostages by Hamas. And a Bloomberg scoop, the U.S. looks into whether China's DeepSeek got a hold of restricted NVIDIA chips via Singapore using third parties. It's just gone 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg. Happy Friday to you, Jumana.
Yeah, happy Friday. Got that Friday feeling for sure, Jen. It's been the longest week. It's been the longest month. It's still actually January. I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Still a lot going on in these markets, Jen. And the big talk now is about these tariffs that the Trump administration is looking to impose as soon as tomorrow on Canada and Mexico, of all countries.
Absolutely. And it's hard to believe it's only been just about 2 weeks since this new administration has come in. But look at all of the impact that it's had globally and even on markets. And let's just take a look at where markets are positioned ahead of the trading day. It is the last day of the month. But of course, many people are paying close attention to what happens on February 1st. But this week has been a week full of central bank decisions. We've also had earnings from a number of major companies, including, of course, yesterday, Apple, to cap things off. If we take a look at U.S. equity futures, though, leaning in the green, gaining ahead of today's session. Apple's earnings yesterday after the bell, offering a bit of a glimmer of hope for investors for the future, sending those shares higher in after-hours trading. But we do have to remember it's been quite a volatile week for big tech. Of course, starting the week off with DeepSeek and AI investment questions. And the NASDAQ 100 is actually set to decline for its first week in 3. We also have the 2-year yield up there on the board, trading right now just at 4.23%. We did get a U.S. GDP report on Thursday, but today we will get the Fed's preferred inflation gauge. That's PCE due later today and expected to show a small acceleration in price hikes. So potentially, what does that mean for the central bank's next move? The Mexican peso declining right now, down just over 0.2%. And of course, Mexico's in the firing line of Trump's tariff threats. We'll see what impact that has on the Mexican peso and also the Canadian dollar. And Brent crude up just about 0.5% there after hitting a new low for the year as traders again continue to assess Trump's threats. And just to bring you this terminal chart, we are seeing more and more uncertainty brewing for investors and really many investors wondering what Trump's next move is. And that is sending gold to new highs. Gold actually hit a new record high, and we're seeing investors flock to the haven assets, just seeking to diversify their portfolios, but then again, trying to sort of wade through a lot of the uncertainty and potential inflation to come if we do see those tariffs actually setting in. But let's pivot back here to the region. South Africa's central bank was one of the many banks that we did see making decisions this week. They cut interest rates by 25 basis points to 7.5%. Now, the bank is warning that the risks to the inflation outlook have increased, citing uncertainty in the external environment. Joining us here on set is Elize Kruger, the independent economist, and she is here, paid very close attention to what we did hear from the central bank yesterday. Elize, thank you so much for joining us. So, as we heard from Kenyaho, inflation is still a concern, despite it being within the lower band of the Fed or of the SARB's target. What do you think about their focus on inflation at this point?
Jennifer, yes, I think obviously we are all aware of the uncertainty globally. But if you look at South Africa's specific inflation numbers right now, we are talking the latest available print at 3%. An average yesterday by the bank indicated at 3.9% for 2025. That compares to last year's 4.4%. So actually in South Africa per se, we've got inflation well under control at this point. Yes, there are risks. There are actually always risks that the geopolitical, play out, and also now Trump could be a bit of a, wild card in our scenario. But I do think, in South Africa's case, we still have room to have slightly more monetary policy loosening as we go into this year.
So then what does that mean then for the rest of the year? We actually have Bloomberg Economics seeing the central bank holding throughout the rest of 2025. Are you in that camp?
I do believe they've got scope to cut slightly further, at least at 25 basis points. I think what we got signalled yesterday is that they are jittery, and with two of the members voting for a no change, it's really indicating that we might see a pause at the next meeting if things go haywire between now and March. But if you look at our current scenario on real interest rates, just on the day, we're talking about real interest rates of 4.5%. If you take the January or the December latest CPI print. But let's see the average for the year at 3.9% CPI and the bank's current neutral real of 2.7. If you do that sum, we're actually sitting at 3.6% real interest rate. So it's quite punitive compared to our neutral of 2.7. So from that point of view, there should be room for them to cut further. Yes, I would agree that it's data dependent, and if there's a big blowout in the rand, for instance, before March, I think it would be a pause in March. But if we do not see a significant development on rand, oil, or our inflation predictions as we see them playing out, there's definitely scope for a further cut.
What is your outlook for the rand? We have it up on the screen right now. We actually did on Thursday see the rand strengthening after we got some news from Eskom saying that Eskom is not actually going to be able to impose tariffs as high as they wanted. Where do you see the rand going? Is it dependent on what we do see from Donald Trump?
I think the rand will definitely show the volatility if we see what Donald Trump is doing, and especially the dollar's strength or performance during the course of the year. So I think Trump's policies will most likely result in a stronger dollar, which will be negative for South Africa from the point of view of the rand exchange rate. So I think if we compare to last year's average of about 18 rand 33, we could look at almost a similar average. So I would not see the rand strengthening significantly in this global environment. I think emerging market currencies will take some pressure given the stronger dollar environment. But then I also want to add that South Africa's economic growth environment could be a bit of a mitigating measure. If we start to see growth coming through locally, that could attract capital and that could support the rand at some stage and during the course of the year. But given the negative global overlay, I would almost see a sort of status quo in terms of the average on the rand dollar for this year.
Is your base case that we will see some of that economic growth here domestically?
Indeed. I think we can look out for a real GDP growth in the order of about 1.7%. That will compare to last year's, be it 0.6 to 0.8, so almost double. So that should start to give a bit more attention to South Africa relative to other emerging markets compared to where we were in the last year or two. So from that point of view, that could be giving us slightly reprieve in terms of just global factors impacting on the rand.
And Elize, I wanted to ask about this scenario that we heard from Kanyaho about potential trade war and what that would do for the rand, but also for the inflation picture here in South Africa. Were you able to dig into that and sort of see, do you think that's sort of the worst case scenario?
Yes, I think that's a pretty worst-case scenario, especially in the short term. I don't think we're going to see an immediate reaction in the rand going to like 21 to the dollar. I mean, from current levels of 18. I think it's an extreme scenario.
You said the rand could get to 21 against the dollar.
Yes, so that's quite an extreme scenario, I would say, in my view. But not impossible to see the rand blowing up to 19 and, closer to 20 or so. But I think the type of scenario they looked at is really an outlier. And, interesting that they only see rates then at 5% or inflation at 5%. It's still actually inside our target band.
Right.
So I think there's a bit of room in terms of where we are currently looking at average headline CPI around 4% this year to take a bit of a shock and still not be in trouble in terms of our inflation rate. So from that point of view, that's why I really believe there's a bit of scope for them to cut further, but that they'll only do that if the environment is conducive and if there's not a blowout in terms of the drivers in the run up to the March meeting.
Right, and you mentioned, of course, unemployment, which is also another factor there. We have to leave it there, unfortunately. Thanks so much to Elize Kruger, an independent economist, joining us here in our Johannesburg studio.
Yeah, so interesting what she had to say about rates still being too restrictive in the South African economy, even after the SARB cut by 25 basis points. Thanks for that interview, Jen. Now, for a look at some of the other stories we're following today. U.S. investigators have found the black box flight recorders from the American Airlines jet that crashed in Washington after mid-air collision with a U.S. Army Black Hawk helicopter. Now, 67 people were killed in one of the deadliest U.S. air disasters in decades. President Trump has signed an executive action to undo DEI programs at the Federal Aviation Administration, which he blames for one of the deadliest U.S. commercial airline crashes in decades. But some aviation experts and officials argue a shortage of pilots and air traffic controllers are actually the main problems.
We do not know what led to this crash, but we have some very strong opinions and ideas. We'll find out how this disaster occurred and will ensure that nothing like this ever happens again. The FAA and the NTSB and the U.S. military will be carrying out a systematic and comprehensive investigation.
And the European Union has resuspended its case against China, the World Trade Organization, over allegations of economic coercion targeting Lithuania. The case was first filed in 2022 after Beijing imposed trade restrictions on Lithuania due to its official contact with Taiwan. The EU had suspended the case in 2024, but resumed it last week to prevent the case from lapsing. And coming up, humanitarian groups warn Trump's halt on foreign aid risks both lives and America's global influence. We discuss with Linda-Gail Bekker, CEO of the Desmond Tutu Health Foundation, next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, humanitarian groups are warning that the Trump administration's halt on foreign aid risks both lives and American influence in Africa. The order is likely to affect HIV programs, malaria prevention, maternal health support, and clean water across the continent. Joining us now to discuss is Linda-Gail Bekker, CEO of the Desmond Tutu Health Foundation, joining us from Cape Town. So, Linda-Gail, thank you so much for your time. There's been a bit of confusion since we heard this news from the Trump administration about what is and what isn't allowed at this point in time. Maybe you can clarify what you've been told about the current state of aid.
Thanks, Jennifer. So between the dates 24 to 28, various what we call PEPFAR implementing partners and other partners who receive this type of assistance and funding were told to stop work. So we were given stop work orders. And then we did see the memo that came out from Mr. Rubio around a waiver based on humanitarian grounds. We did not really see that that applied to HIV in particular, and subsequently we have heard no further information. In fact, some of the programs received their stop work orders after that memo was issued. So there really is a great deal of confusion on the ground as to whether the waiver is being applied, who it applies to, and when and if that is actually going to come into play.
And Linda-Gail, maybe you can talk to us about PEPFAR and what it actually is intended to fund. A lot of this was started because of a U.S. congressman apparently accusing some nurses in Mozambique of using funding for abortions. But what is the intention of PEPFAR?
Well, PEPFAR, historically is an amazing program started in 2003 by the then George Bush administration, a Republican administration, who asked the question why people were dying in droves in the Southern Hemisphere from HIV/AIDS, and yet antiretrovirals were making such a difference in the Northern Hemisphere. And when it was recognized that this was due to the price of the drugs and the inaccessibility, George Bush put together this President's Emergency Fund for AIDS Relief. And it really was that, an emergency fund to save lives. And subsequently, it has saved millions of African lives. We have, over the years, evolved the program. Some countries are very dependent still on the aid to buy antiretrovirals. For some of the countries, such as South Africa, it's moved into more technical assistance. So it provides really the buffing up of the program to make sure that we provide the best kind of program, really trying to move towards epidemic control. And of course, removal immediately of this program has set us all into spinning and not really understanding what is happening on the ground. It's led to gaps in care and treatment, and obviously a great deal of fear that we're going to see regression in the AIDS response and again see lives lost and infections occurring that we were making such headway on.
Can you quantify that for us, Linda-Gail? Because the U.S. has given upwards of $70 billion to AIDS Group. What does the gap, even if it is 90 days, what does that look like to the progress that you've had?
Well, I think it's going to be, there have been some modeling studies. There's one, in fact, that is out that shows quite distressingly that we are going to see hundreds of thousands of deaths again in the next, medium term, and indeed lots of new infections. So there is modeling that is being done. Otherwise, obviously, it's a lot of conjecture. But what I can tell you is this will leave gaps in the health system and in the continuum of care. For instance, PEPFAR provides funding to ensure that counsellors and lay workers are able to go into the community and find those individuals who, for a variety of reasons, might have slipped out of care. So they're no longer coming to the facilities to pick up their antiretrovirals. They then are at risk of, again, becoming infectious, which means they can then, disseminate HIV to other members of the community. And it was those kinds of interventions that PEPFAR was providing support for. Indeed, even, for example, testing in our antenatal care services, moving into the communities with mobile clinics. Those are all the additional funding that isn't covered in our national health budgets. And that certainly applies to South Africa. But when you move to a country like Malawi or Mozambique, the funding provides so much more, including the purchase of the antiretrovirals themselves.
Linda-Gail, what does this mean for potential future pandemics? Because this is, of course, not concentrated in just the communities that you're focused on.
Indeed. So, infectious diseases often track together. So the first co-infection that I worry a great deal about is tuberculosis. At the height of the HIV epidemic in this region, we saw a huge resurgence in tuberculosis. We've been bringing that somewhat under control because we've been able to get somewhat ahead of HIV. And of course, I'm worried about the tuberculosis epidemic, which clearly is an airborne condition. It has no borders, and there's that concern. Perhaps viewers are aware that we've had cases of Ebola again in Uganda, even in this last week. PEPFAR has gone beyond HIV and shored up because of the health system strengthening, because of the additional support that's come in. We've been able to, kind of make sure that those infections, those additional public health challenges have been able to come under the umbrella. And you mentioned malaria. Malaria is another very important condition here on this continent, important for people traveling into Africa. So yes, it has global impact in that regard.
All right, Linda-Gail Bekker, CEO of the Desmond Tutu Health Foundation, joining us there on the latest on the U.S. rescinding aid. Linda-Gail, great to get you on. Thank you so much for your time. And programming note, next week we're actually going to be at the African Mining and Dabra Conference in Cape Town, and we'll be speaking with a number of key newsmakers, including Botswana's new minerals minister, the CEO of Rio Tinto and Barrick Gold, among a number of other great guests. So please stick with us for that. Now, coming up, India's economy is set to log its weakest growth since the pandemic. We'll get the details next. This is Bloomberg.
India's government is expected to focus on boosting consumption in the upcoming budget this weekend, while sticking to the roadmap of narrowing the fiscal deficit. This as growth is slowing in Asia's third largest economy. For more, let's bring in Bloomberg South Asia economy editor Rushi Bhatia. Just to give us a run through of what the street is actually expecting out of this Indian budget.
Well, Prime Minister Narendra Modi has a tough task at hand. He has to make sure that growth is taken care of at home, and at the same time, India is able to manage some of the headwinds that we're seeing as far as the globe is concerned as well. We are seeing how India's economy is going to register a growth of 6.4%, which is the weakest pace since the pandemic. And going forward from here, there is a lot of concern that consumption is slowing down in the Indian economy, and which is why there is tremendous pressure on Finance Minister Nirmala Sitharaman, who will be presenting her 8th budget this time around tomorrow to boost consumption through probably income tax cuts. There is also focus on whether the government will be able to keep up with its promise of maintaining the fiscal deficit target of 4.5% for next year, which means that they will have limited room to spend on capital expenditure, which has been the primary source of growth in the last few years.
And what can Modi's government do actually to boost jobs and lift manufacturing here?
Creating jobs for the millions of people that are entering the workforce in India is also crucial for Prime Minister Narendra Modi. Last year, we saw a massive announcement of close to $24 billion done by the government to boost jobs, to train people in the workforce. So we will expect some sort of an announcement or an extension of those programs going into this year as well. And apart from that, we are expecting that the government will look to announce some manufacturing incentives, mostly to make sure that some of the electronic supply chains issues can be really addressed. We have seen how the PLIs have had limited success with the likes of Apple Inc. and Samsung setting up their factories in India. But this is not really enough. India needs to do a lot more to get more companies to set up their manufacturing base in the country.
Thank you so much for the overview. That was Bloomberg South Asia economy editor Rushi Bhatia. And a final look at markets on the final trading day of the week. It's been quite the week, starting with DeepSeek, ending with tariffs. Lots of data in the middle. S&P futures up about 0.25%. Nasdaq up 0.5%. Euro stocks slipping just below the flat line as we head into the European session. But that was it for our show, Horizons Middle East and Africa. I'm Jumana in Dubai, alongside Jennifer Sabazaja in Johannesburg. Stay with us for Daybreak Europe.